Welcome to Moneyline. This is Matt McCall. Thanks for joining me today. As you can see, a little bit of a different backdrop. I got a hat on today. It was a long evening, long morning, but we're here on our Friday regular show with the Catskills behind me right now. Still doing some work, but a lot coming up. Today's show is a little different. We're taking all your questions. I'm live on Twitter right now. I'm going to take all your questions on Twitter, and we're going to answer them and get through this. All coming up right now on Moneyline.
The buck starts here. Moneyline with Matt McCall.
Again, Matt McCall, thanks so much for joining me here on Moneyline. Man, I look like a mess today. It's been a fun last night. We're up here, you can see behind us, at the Catskill Mountains in upstate New York, I guess you'd call this. A little long weekend to recharge my batteries, if you will. But of course, still working and wouldn't miss a show here for Moneyline. But so there's some weird noise in the back. I hear horses out there right now clamping around. But what we're gonna do today, we're gonna keep it maybe a 20-minute show, but we're gonna take all your questions from Twitter. I have Twitter pulled up right here on my computer. And what's amazing about this, man, look at this sweatshirt. It's great. It's such great weather out here right now. And I'm gonna do this quick because I have a nice hike I need to go work off all the food and drink I had last night. So let's jump into this. Let's real quick cover the markets. And we had the tech pullback, which I talked about on Tuesday, as a great opportunity. And I still believe there's a great opportunity right now. We did rally on Thursday, then sold off into the close. We're up right now. We're up about 0.75% or so on the major averages. About that. S&P's up about 20 points right now. So Dow is up about 2 and change, and NASDAQ's up about 60. So we're trying to bounce back. We'll see if we can hold into this. And this is around 10:45 Friday morning here, September 11th. So we'll see if we can hold, but I think that we will start seeing some buyers come in because I think we've seen too much too quick in the sell-off, especially in the tech stocks. They were ahead of themselves, as I mentioned, but they have since pulled back. And there's a lot of the baby thrown out with the bathwater. You're seeing a lot of other stocks that didn't run up as much, but are still getting sold off due to just this market-wide sell-off we've had for 1 week, folks. So let's take it in stride and use this opportunity to go through our watch list and buy some quality companies. Really the most important thing today, which I should have let off the show with, but it is 9/11, 19 years ago. You could have actually probably seen the smoke, unfortunately, on the other side of this looking towards the city. And somebody asked me a question, what was I doing on 9/11, 2001? And I was actually, as a stockbroker at Charles Schwab. I had been there, I guess, a little over a year at that point, in Denver, Colorado, in my office when it happened. And I stayed for work that day. They sent everybody else home, and I stayed to take calls. It was a crazy day because I had a lot of friends who were living in and around New York at the time, and thank God all of my close friends were safe. But it's something we should never forget, and I'll never forget it. And I know it affects everybody differently, but spending majority of my adult life after that living in Manhattan, it's something that I don't think I'll never be over it. So prayers and best to anybody who's affected by that. And that's the one good thing that came out of that was we got to see how amazing our country is after that, and how we all came together. I'd love to see that happen again. I don't want to see anything bad happen to force that, but I just think we're being torn apart because of politics and BS right now. I hope we do get back to supporting each other like we did after that. So enough of that, but so let's get into your questions. So I got Twitter pulled up, as I mentioned, right here. You can hear the golf cart behind me. So I apologize if it's not the best setup, but it's better than nothing. So let's take a look here. WORKHORSE. A lot of people ask about WORKHORSE because that is in our portfolio. And WORKHORSE, we got in, I think, at $2.74, $2.75-ish, $2.75-ish, around there. And now you have WORKHORSE trading at in the 20s. So we are more than happy, to say the least, with the returns that we've had here in WORKHORSE. And when we put it in, it was before this whole EV, electric vehicle thing, took off. It's trading today at $22.60. Amazing. I mean, I think this will, by the end of the year, be a true 10-bagger for us in less than a year, potentially less than 6 months. And that's just unreal. When I put it in a portfolio and I came up with it, it's a stock I've been watching for a long time, between about $2 and $3. And finally, I took the plunge and put it in. But it was because I liked what I saw in the company. I liked what management was doing. And the big upside, and this still hasn't even hit yet, is the potential for several billion dollars, about 4 to 6 billion, I think the numbers are always changing, that the U.S. Postal Service, USPS, will be paying out to upgrade their vehicles. The current vehicles I have right now are been on the road much longer than they're ever supposed to be. The parts, they're Grummins, Grumans, the old Northrop Grumman, but it's a Grumman aspect of it when they built these. They can't even find parts for them because they're so damn old. They can't find mechanics to work on them because they're so old. They're so inefficient. I mean, they're junk. I mean, they're cool. You know, they slide the door. We've seen them all in our small towns around the country, but they need to be upgraded, and they're going EV. And I'm not getting too much specifics, but the point is there are several companies that are up for it right now, and they're probably going to go U.S.-based. WORKHORSE is U.S.-based. A couple of the others aren't U.S.-based. So I think they may probably split it up, but they can get a couple $1 billion out of this for a company that's still only worth $2.3 billion. When we recommended it, it was obviously well less than $1 billion. It was a couple $100 million. It still, though, would be a big hit for it. To me, WORKHORSE will be one of the electric vehicle delivery truck leaders, and that's going to be huge to me. It's going to be, you'll see more EV delivery trucks before you really see the EV vehicles. I think that will take off, and WORKHORSE is a leader. It's always tough for me to say, hey, it's a great buy at $22.85 where it is right now, because we originally recommended it at $270 and change. But maybe in a pullback, but we're definitely holding it. We took some off the table. It took a gain of like 560% or so, 540%. So we banked our initial. We took a big profit, and we're playing with house money plus right now, and it's a great way to do it. Let it run, because you don't want to get greedy either, because you never know. So yeah, I still love WORKHORSE here. If you own it, I definitely let this baby run. I mean, this could be a $30, $40 stock in a couple of years, if not higher, in a few years down the road. So a lot of people ask about that. So let's go. And again, I'm looking right at Twitter right now, so I'm not even doing any research on this before this. So I'm just kind of going through. There's a couple questions about this, and I think it's pretty interesting. It's a SPAC, and the symbol is FMCI. And I think the company, it's called a Forum Merger 2 Corporation, FMCI. Today it's up $1.50 to $25.71, up 6.3%. And it's a SPAC. So as we all know, SPACs, Special Purpose Acquisition Corp, when they come out, they're at $10. Bill Ackman did it at 20 because it's a little bit bigger one, but almost all, 99%, come out at $10. And then it's a blank check company, so they get all this money together they raise. It could be a couple $100 million to Bill Ackman's is $4 billion. It's the biggest one ever. So they get the money together with the intention to go out and to merge with a company or buy a private company and take it public via the SPAC. Well, so this company did that, and they're merging with a company called Tattooed Chef, which is, I never heard of it until I know the company now because I've been following the SPACs real closely, but it's a vegan food brand. And I'm not vegan, but I don't mind vegan food by any means. I eat pretty damn healthy. But you can find their food at Walmart, Costco. But again, it's already jumped from that $10, as I just mentioned. We're in the mid-20s now. And I think people are seeing this as, Beyond Meat, for example. But Beyond Meat, BYND, was a big IPO last year, and this, the big, you see it everywhere, and you have, the Beyond Burgers and all that kind of stuff. And it's not bad. I've had it, but it's not bad. It's not my cup of tea. I'd rather have a real piece of steak like I had last night. But Beyond Meat's now an $8.6 billion company. So people see that and say, wow, why can't Tattooed Chefs do the same thing? So I think it's very interesting play. The problem is at $25 a share, already up 150% from its SPAC price. I don't know if I would chase it right here, but it is one to keep an eye on. And the other thing is I don't have the detailed financials of it because it's a little tough to get it in these companies until they really start doing some reporting. Not a lot of research on it, and I haven't done a deep dive or called the company, but it definitely is one that I would keep an eye on for sure. And that's FMCI, and they will be changing the symbol and the name once the merger is complete, which should be pretty soon. Let's see, talk about solid state batteries and electric cars. I just talked about electric cars and WORKHORSE. Everybody wants to talk about EVs. There's so many EVs out there right now, stocks that have gone through SPACs recently. And as far as solid state batteries, as many of you know, I have a solid state battery portfolio, and excuse my reach here, but I'm just trying to pull up some stuff here for you. In my solid state battery portfolio, we have, I believe, 5 stocks now. I'm trying to pull it up. Of course, in the middle of nowhere out here, I don't have the greatest internet in the world, as you can imagine. But the solid state battery to me is something that is the future. I think a lot of people will say, well, we're not going to go solid state. It's going to be a different type of lithium type battery. All solid state means is right now in the middle of the battery, it's liquid, and liquid makes it very volatile, and that's why we saw the Samsung phones start on fire. And when you start thinking about the future of batteries and let's say aircraft that are going to be electric aircraft, you can't have something that's that volatile. The cars, you don't want something that's that volatile because they blow up, and solid state battery will not do that. They're much safer. They have a better battery life, longer charge life. So to me, it is truly the future. We're not there yet, but you want to get ahead of this, because if you take a look at our solid state battery portfolio, we started with 6 stocks January 3rd of 2019. So you're looking at what, a year and 8 months, a little over 8 months. So so we're about 20 months in, right? 20 months in, we've sold one of the stocks because it was merged by something else. So we sold it for a small gain. So we now have 5 positions in there. The average return is 109%. So this just shows you every position's up but one. One's down 2%. One's up 516%. One's up 47. One's up 66, and one's up 21. But the average ends up being about a 109%, folks. So the basket approach, solid state battery, and this is, to me, you're in early innings, because there's really no mass-produced solid state batteries right now. A lot of it's still in R&D stage, research and development. So a lot of upside left. I think if you're a subscriber to Investment Opportunities, which if you are, thank you. And if not, check us out at McCallMoneyWire.com. I mean, it's $100 a year. It's not a lot. We're not asking to shell out a ton. Obviously we have more expensive products where we do smaller companies and stuff like that. But for $100, I tell you, it's worth every penny. I write everything myself. We do 20, 25 pages a month, and you get some great ideas. You get the entire portfolio the moment you log in, all the special reports we've ever done over the last couple of years. So McCall Moneywire. And but before I forget, down below, please do your comments, click like, subscribe. Tell your friends about this, and I will give a shout out to Eric last night, sitting having a drink, waiting for dinner on the patio watching the sunset, and Eric and his girlfriend Emily came up, and he said, "I know you," and he smiled, and I felt rude because I had the worst memory. I thought maybe I knew him from New York, a younger guy in his late 20s, and he's a follower, watches the podcast, follows me on Twitter, so. So in the future, people used to come to me all the time at Fox, when I was on Fox and airports and stuff, and I love it. Like, I'm not that kind of guy that doesn't love it. I will say this, though. The weight in my heart to sit down and talk, like Eric did, he poured me some wine. Pour me a drink, and I'll sit there and I'll talk your ear off all night. We reconvened after dinner, and we were up late talking market, talking sports. So if you ever see me out, offer me a drink. I'll buy you a drink. You give me a club soda, I don't care. We'll sit there and we'll talk markets, we'll talk sports, we'll talk whatever you want all night. I'm definitely a talker, and hopefully we don't have to wear a mask. We sit outside, so we don't have to wear a mask. All right, so definitely come up to us if you see me out. Going through Twitter here. Let's see what else. What other stocks? IOVA. That's an interesting one. This is a biotech stock that I've followed for a long time. Back in the day, it was actually called Line Biotech many years ago. People might remember it. It's called Iovance Biotherapeutics now. IOVA. 3213 is where we're at as of today, up at 1.4%. Over the last 6 months, it's really been kind of going sideways. It's held up real well during the pullback. To me, you're really setting up for a big breakout. I think there's a big upside potential for Iovance. Right now it's about a $4.7 billion company. I remember when this thing was so tiny. $4.7 billion company. And let me take a look at here at the fundamentals real quick. You're not looking to really see any revenue until about 2024. That's when it should start taking off. Same thing with earnings. You shouldn't really see earnings until then. That's when they expect approval and some of the drugs to start getting out there. But at that time, you want to be ahead of that. Obviously, once that gets approved, that's when things take off. This is also, in that kind of wheelhouse where it could be a takeover candidate. I never buy stock if it can be due to it could be a takeover candidate. If it is, it's just an added bonus. But that is one I think you really should keep an eye on. Somebody just posted his Twitter, and this is something I actually should touch on. I've touched on it many times, but people just don't get it, folks. The person says, "I wish you owned the stocks you recommended. Otherwise, it's hard to follow your advice. Your reasons for not doing don't hold any water." I don't care. Then don't be a subscriber. We'll give you your money back. I don't give a shit. The reason we do it is a very ethical reason to do it. I have 3 tranches. I have my own money that I invest. I have Penn Financial Group, my clients' money that I manage, and then we have the newsletters. And due to company regulations, due to SEC government regulations, it's not good to mix and match all that stuff. Because I do know guys in my industry that own stocks, but then they put out the research and they get the profit from that. You're kind of talking up your own book. And people do it in CBC too, big guys do it. But we recommend a lot of small companies in our early stage investor, and it just wouldn't be ethical. It just would not be ethical, because then, if I'm getting in there before you and buying it, you're pushing up the price for me. And just there's too much gray in there. So to me, there's tens of thousands of stocks here in the U.S. and abroad, and of course the weed whackers behind me right now, U.S. and abroad, that if I look at 5G, I have a 5G list of probably 15 to 20 stocks, U.S., Europe, Asia, and I'll mix those up, and we're going to buy a basket anyway. So we'll buy the basket for subscribers, or recommended basket for subscribers. I'll buy 1 or 2 for myself, and I'll do some for clients. And people say, well, who gets the best ones? I don't freaking know. I don't know which of these ones are going to go up. That's why we buy baskets. That's why you diversify. So I don't know, folks. If I knew which one's going up, I wouldn't be sitting here. It's not that easy. So if you don't like the fact I don't buy it, and you don't understand what I just told you, then turn it off and go. Like, we don't care. I don't want negativity coming at us like this, because I do my best and I'm trying my hardest. I want every stock I ever recommend to friends, family, clients, subscribers, myself to go up. It's just not real. So, we're doing our best here, and the one thing that we are doing is I'm completely open with you. There's no bullshit. There's no things going on behind the scenes. There's no extra ways to make money. You see here is what you get. So this is real again. And if you don't like it, then turn it off. It's no skin off my back. I don't like everybody. You don't have to like me. All right. So sorry for the rant on a Friday morning, but sorry, I'm just trying to go through more of these questions here on Twitter. There's quite a bit. Virgin Galactic. People ask about space, investing in space. That's a good question too. Virgin Galactic, that was a SPAC as well, believe it or not. They're moving along, and symbol SPACE, SPCE, if you're wondering what the symbol is for Virgin Galactic Holdings. It's a pretty big company now. It's about $3.6 billion company. It's down about 2% today at 17.10. It was up as high as 42 and change after they announced the SPAC, and it ran up, so it's come down quite a bit. I love space as like the next frontier. I just think it's kind of years away, and this is really the only way to invest in it right now. I mean, Elon Musk has his stuff, but that's privately held. So I don't know where the upside is. I think there's opportunity cost where you have some better companies out there right now. This may sound crazy, but we have a company that's one of the leaders in flying cars, aerial vehicles, autonomous aerial vehicles, AAVs. It's a Chinese company, and I'd rather own that personally. Much smaller company. I'm not going to tell you the name of it, but it's a much smaller company. Our little flying car company. It's about just under $500 million market cap, so a little bit smaller. To me, much more upside. I look at that. You've probably never heard of the company. Again, my subscribers know what it is, but I can't share that with them because it's not fair to them, because they pay a lot of money to get it. But if I take a look at this company, and you look at the potential for growth, I mean, you're looking at potential revenue growth in the next 2 years tenfold. So the big upside, much more than Virgin Galactic. So, if you do Virgin Galactic, small portion of your portfolio, because I just think honestly that it's probably dead money for a couple of years. So that's kind of how I look at it. I'm gonna take one more question. I wrap it up because I feel like the weed whacker guys get closer to me. And that was one of my first jobs, by the way, a weed whacker at the country club in the summer. We'd smoke cigarettes and chew dip and weed whack for like probably $6 an hour. One more question here. This is questions on Penn Gaming, PENN, and the person on Twitter, looks like his name's TJ, T-E-J-Y, says, I got it at $4.99, humble brag. Is it time to take some off the table or ride it up? Penn Gaming, to me, they're part of Barstool Sports. Dave Portnoy, who I'm not a big fan of, but he's a genius marketer, I'll give him that. So Penn Gaming's down a little today, but the stock has been on a freaking tear. I will say I bought it on the downturn for my own personal money when things were starting to go crazy. I guess it was in Marchish time frame. it fell all the way down to less than $4. I held on, wrote it up, it got out to like a 1% loss. I would have more than double my money if I would have held on. It's stupid, I sold it. I hold on, I let it run. I think it's a little bit ahead of itself right now, but I would hold it and let it run. Sports gambling is just a very, very, pun intended here, first inning. Huge upside when it comes to sports gambling. So, and this is a big player in it, so I'd hold on. And the name's PENN, and I own a company called PENN Financial Group, which is my money management firm. So, and I'm born in Pennsylvania, and so maybe I got a little like for it there too. But I'm gonna wrap this up because I can hear the weed whacker guy. Don't forget to like, subscribe, any comments you have, and again, if you're pissed off because I don't buy what I put out, then it is. I apologize that you get pissed off over stupid shit like that. But for those of us that follow me and get it, thank you for continuing to follow. And comment down below if you have any questions. I'll definitely take them head on. But the market right now, Dow's up 230 points, S&P 23, Nasdaq 71, Russell 4. We're up, doing well. Nice Friday here. I'm about to go for like a 10-mile hike to sweat out all the booze I drank last night and enjoy my week. And then I'll come back and work, and we'll talk to you soon. We'll do some research for the weekend. We'll be back Tuesday. But again, as I always say, enjoy your weekend. Be safe, be happy, love somebody, give them a hug, whatever it might be. But number one, be safe, enjoy it, and remember what happened 19 years ago in the state of New York that I'm in right now. So let's all come together and have a great weekend. All right, thanks so much. And again, I'm Matt McCall, and this has been your Weed Whacker version of the Money Line.
Thanks for listening to Moneyline with Matt McCall. To find more information, head over to McCallMoneyWire.com. That's McCallMoneyWire.com.